Welcome to the weekly roundup for the week ending Friday the 28th of August. And what a week it's been. So we've got bourses on both sides of the Atlantic are looking to finish the week with gains. The focus has really been on Federal Reserve Jeremy Powell's appearance at the Jackson Hole summit. Now, expectations were for Jeremy Powell to adjust or to shift monetary policy, or sorry, not monetary policy, but policy for the Federal Reserve towards a more lenient approach to inflation, so a softer approach to inflation, which would allow inflation to overrun that 2% target. And he didn't disappoint. So on the back of that, we've seen the FTSE is looking to end the week around 0.1% higher. I'll come back to that. It's lagging its peers. DAX is looking for gains around 2.3% of this risk-on feeling, thanks to looser policy expected from the Fed. Over in the US, Dow's looking for gains around 2%. S&P is looking for gains of around 2.5% across the week, and the Nasdaq 2.7% across the week. And we've also seen fresh all-time highs from the S&P and the Nasdaq because lower rates for longer are business friendly. It means cheaper borrowing, so that's sort of considered to be stock beneficial and sending the stock markets higher. However, the US dollar, lower rates is not beneficial for the US dollar, which is currently trading at around a 2-year low versus the basket of currencies. Now, that weaker dollar is also boosting the pound. The pound is trading at the highest level it's traded at in over a year. And that's despite concerns over Brexit talks, which appear to be going nowhere, and also concerns over the labour market in the UK. We've seen the CBI, the Confederation of British Industry, has in two separate surveys highlighted the extent of job losses that's happening in the service sector and particularly in the retail sector at the moment. But despite that, the pound has traded strongly. It's traded higher. It's gained 1.5% across the week. And because of that, multinationals on the FTSE 100, they're having a less beneficial exchange rate, which makes them less attractive to investors. Moving on, gold is up around 1% across the week thanks to the weaker dollar and expectations of lower interest rates for longer. It's trading around that $1,950 the ounce level. Also, oil has had a fairly steady week, in fact, despite concerns that the Hurricane Laura in the US was going to hit the oil refineries. That hasn't been the case, and so we've actually seen a fairly steady week as far as oil prices are concerned. Looking at single stocks, some big movers. The first one that we're going to talk about is WPP. They reported this week they're trading up around 8% across the week because their Q2 results were actually less bad than feared. Net underlying sales declined to 15.1% in the second quarter. That was better than the 20% decline that was actually expected. Also, WPP has become one of the first British companies to reinstate its dividend. So it announced that it will be paying out a 10p interim dividend, which was obviously cheered by investors. Not performing so well has been Rolls-Royce. Rolls-Royce has had a tough time. I mean, its shares are trading around the lowest level for a decade. It's been really hit by the coronavirus. They reported 5.4 million loss across the first half. Billion loss across the first half, and a huge profit miss there. Basically, what's happening here is their aviation business, which usually accounts for 50% of revenue, has actually come to a standstill. That revenue stream has been cut as fleets and travel across the world has sort of global travel on aeroplanes has obviously come to a halt. Fleets have been grounded, and that's massively hit Rolls-Royce, who are now sort of trying to do a fire sale in order to shore up their position. Finally, Apple. There doesn't seem to be many weeks go past where we don't discuss Apple for one reason or another, but Apple have also hit a fresh all-time high this week. They surged through the $500 per share level to hit $515 per share. Now this is basically thanks to this move into tech stock as sort of a safe haven flow, and also as the coronavirus pandemic has really sort of accelerated demand and reliance on technology. Now Apple are going to be going for their stock split, their share split today, so when they open on Monday, they will no longer be trading around the $500 the share mark. Thanks very much for watching. Have a great long weekend.